Well, once again, we find ourselves on the precipice of another big drop, closing the week out kind of significantly south of any of our predictions, actually. 49.6724. Commodities moved up a little bit today, 1.1%. Yields kind of recovered after the drop last night, but not fully. 10 years back at 4.623, and the dollar stayed pretty steady above 106. Correlation on the 1 month is still getting pinned, but 3 month core is dropping very, very rapidly, or rising very, very rapidly. Jesus. A big move today in longer term inflation expectations. We see VIX 3 month at 3.16, VIX cash up 4.33, VIX futures 2.6%. Forward yield on volatility remained positive at 5.325. Leverage increased from the overnight low on the yen carry by about 22%. So still leveraging this up a lot, probably to offset margin requirements from short vol positions, since the leverage is very much in line with vol control strategies. Like the correlation there was like 1-to-1 almost. Move probably not updated. Skew, so we're still seeing a lot of tail risk demand. 10.73% of the S&P above its 20-day moving average, and we saw so to close the week out, VIX contract in front correlation up to negative 21.28%. That started this week much higher, around 26%. So those are becoming pretty quickly more correlated. You can see that over the last several weeks, right? Eventually they'll be positively correlated, and I think that's around the time things get really, really spicy. We're pricing in 0.32 rate cuts for the rest of 2024 currently, or at least Fed Fund futures are. That's pretty exciting. Some big moves in NQ today, down 213 points. Gold up 16, still holding steady at 2,400. Copper had a big move up, almost breached the 450 mark, and oil flat on yesterday, but recovering a little bit. Supposedly the BTC halving's coming up in like a couple hours. I don't know if that's true or not, but someone said that. This puts us in an interesting situation for next week, and we'll talk about it more over the weekend. But we are closing deep in bearish territory, or bearatory, if you will. We are under the synth long at 5,000. We are below delta neutral. The market maker and CTAs are both sellers of the flat tape on the SPX and ES, and we have fallen below the JPM put side of the long put side of the JPM collar at 49.75. Obviously, this opens up a lot more downside range. We could see a continuation of this next week, especially if volatility rises over the weekend. We're likely to see the sell off into open on Monday. Next week, we do have PCE data, so there is some data coming in that could potentially stem the bleeding, but it would have to come in quite soft. And so far, the trajectory of Supercore, which is the Fed's favorite metric, has been skyrocketing over the last 3 inflation reports. I don't think that's going to turn around a lot with this report. So I think my expectations are kind of set on consumer prices still being a little worse. As we start to report April and financial conditions are tightening a bit, it's possible that we start to see a little bit of inflation ease, but we're going to need much tighter financial conditions, probably for a period of a few months, to really turn the trajectory of inflation around. Can't this be pumped back to 5,000 with a massive amount of futures like they did last night? Sure. Although possibly not the capitulation to back it, right? Like last night's reversal was largely possible because of how rapid the drop was, right? Harder to reverse this slow, meandering decline that we had today. BTC will have when it reaches 840,000 block height. The current block height is 839,970. Block time of 583. Have in the next 4 to 5 hours. Okay. Go EV. What about it? I mean, we'll see. It's interesting. It's definitely primed for something to happen. But if indexes keep falling, it may not, right? That's kind of the problem with these like reg show plays and reverse split plays that everyone's been, getting to FOMO in on over the last few months and had a decent amount of success is when indexes are selling off and that ETF gearing mechanism flips the other way, there's a very good chance that enough liquidity can be provided by active fund selling, that no liquidity needs to be sought by buying in the open market, right? And so these carry a lot more risk. I will say it's like 21 days on reg show, or almost no 22 days on reg show, 23 if it reports on reg show tonight. There's obviously a lot of FTDs built up from right after the reverse split, and based on the liquidity, it's got a chance to run, and it could get a decent run. I think Gamma Max is around the $5 mark, so it could potentially double in price. But if indexes are still selling off come Monday, we may not get any run at all, right? So it's a big risk, very big risk. I'm still buying 150 Fubo loops every day. I have 20 so far. Okay. Timeline on BNED price improvement. Ooh, could be a long time. Depends. I mean, we have to see how fast the offer gets bought up. Could be really quick, might take a while. And how quickly they can start making that capital work for them as they deploy their revenue streams. I can't emphasize how risky BNET is, and I would not overextend myself on it. But they are in a position where they could turn the business around substantially, and if they're able to do that, which it seems that they are trying to do, versus giving up and filing bankruptcy, it could have some decent value in the future. I think their biggest quarters are Q3, Q4. Obviously, they're very exposed to the time of year where students return to school, and that's what their big revenue driver. So probably around then. I don't think summer is going to have a lot of positive impact on the price, like the summer earnings. They're calling this a market crash. That's a bit soon, but okay. Good. That's what scares people. QQQ sneak crashing in the background. Dow and RSP pretty green on the day. Thoughts? I mean, Breadth has been supportive so far, but if this keeps falling, people are going to just abandon risk assets entirely versus rotating sectors, right? So people are feeling safe rotating into defensives and like stable Dow blue chips, but that's because there's a good chance that this is still just a correction and nothing more. If it starts to look like a crash, people will bail on the breadth too, quick. Are you gonna buy all the 5-cent BNED you can get your hands on? I mean, I'll buy some amount of the offer. My cost basis is 18 right now, so if I could get it to around 10 cents a share, that'd be cool. I mean, I'm definitely not going to buy like 10% of the company or anything. Oxy, what about it? This is not really the day for this, but I'll humor you. Looks fine. It sold off a little bit the other day. Everyone panicked. I don't know which of you are anywhere near your price target, but I mean, back when Oxy was a pickles pick, the price was like that was the target range for buy-ins, which means you should, if you did buy in there, you should be way the up. But I've seen some of you that even play options on Oxy, which I think is beyond stupid. Sorry, LOL. Do Barrick? Lol, why not? I mean, Barrick's just like a big spiky chart that looks like the gold chart. It can go up. I mean, the real move in gold will come if the dollar drops. Especially if it drops rapidly, either through the yen increasing in value or the Fed cutting rates. That's where you would see gold rocket, right? Like the COVID crash, post-COVID crash, right? Should I reverse Kramer? I have no idea. All right, thank you guys so much for tuning in. What a fun week. I will see all of you Sunday at 12:30 p.m. Eastern Daylight Time. I hope you all enjoy your weekend. See you later.